Hello, everyone, and welcome to the ACM Mortgage View. We're so glad you could join us today. And we have an exciting segment today, a lot of fun stuff to cover. We're going to be starting with current events, going into home inspiration stories, talk a little bit about growth mindset, and some hot tips. We'll hear from the ladies on some hot tips, and then go into a fun game on home trivia from all the areas that we're all from. And then we're going into some quick tips on investment that I know you won't want to miss. So really excited about this segment and just wanted to introduce who we have on today. We've got Ashley Smith. Ashley, can you say hi?
Hi, everyone. Thank you for joining us.
Yeah, tell everyone where you're from.
I am from Northern Virginia. Loudoun County is where I do most of my business. I've been in the business for 21 years and with Atlantic Coast Mortgage for almost half of that time frame. So I'm happy to be here, happy to chat with you all.
Yay, awesome. And then we got Gabby Tripp. Say hi, Gabby.
Hey, guys.
Tell everyone where you're from and who you are.
Yeah, I'm from the Charleston, South Carolina area. I have lived here since 2013, and I've been with Atlantic Coast Mortgage for about 4.5 years. And I do the majority of my business in the Charleston and surrounding areas, and also in North Carolina.
Woohoo! Yay. Awesome. And then we've got Amy Carr, and Amy is from Moyac.
Moyac. If you're from here, it's Moyac, not Moyac, because then you'll get in trouble. But I'm in Moyac.
When I say it wrong, so I purposely say it wrong. It's purposely.
So I opened an office this year in Moyac, North Carolina. I also service the Hampton Roads, Virginia, Chesapeake markets, so being right on the border of that Virginia, North Carolina line. I've been in the real estate industry since I was 19, and I've been on the mortgage side of it for 10 years. Just joined ACM, actually, May 2nd is my 1-year anniversary. And yay! And it's the most amazing thing I ever did. So yeah, I'm excited to be here.
Awesome. Well, thank you guys. It sounds like we have a little bit people from, pretty much everywhere on the East Coast. So that's wonderful. So let's just jump right into current events and let's talk about Okay, well, jumping right back, let's talk about what's on everyone's mind in the news right now and what we're hearing about, which we may have known for a little longer than everyone's been aware, but the LLPAs, what is it? What's going on with it? Tell us. Ashley, you want to start?
Sure thing. Just so anybody here watching knows, LLPA, and it's been a popular hot 4-letter acronym this week in the news media. It means loan level price adjustment. And they have been around for years. Typically, you'll see loan level price adjustments on loan to values and condominiums, certain types of products like second homes and investment properties. But recently, we have incurred a difference in interest rates based off of score. And it really, with the new LLPAs that were announced actually in January for delivery of loans starting May 1st. So a lot of homeowners, a lot of buyers have already seen this adjustment in pricing, and it's been in the works for a couple months now. Just so you know, it's more so bridging the gap between your higher credit score borrower and your lower credit score borrower. So where there used to be such a high benefit for that score, maybe now it's still a great benefit, but it's slightly decreased. And if you're a lower score borrower and you have a couple blemishes that may or may not be inaccurate, or had to deal with something during COVID that gave you a hit on your score, now you're actually having less of a hit on the interest rate. So it more so bridged the gap. So it's something, I wouldn't look at as a negative piece in the industry. It really is.
You said it was negative?
I know. It's such a minute difference. And quite honestly, the FHA financing has decreased, as well as the premiums on the VA funding fee. So your government type loans, FHA and VA, are now entering the market as a more popular option. And I was talking to Amy earlier, even on the conventional side, if you're putting less down, you can actually see on the conventional side a benefit to rate versus doing a 20 or 25%. So there are pockets within the new parameters where us as professional mortgage lenders, not online banks, and those who are sitting behind a computer 1-800 number 9-to-5 worker, we are professionals. We've been doing this. We're studying the grid. We know exactly where to place a home buyer to maximize how much they can afford at the best interest rate.
Yeah,
and
absolutely.
One more thing before I turn it over is jumbo is becoming increasingly popular, especially in my area in Northern Virginia. I've been saying 1.4 is the new million. If you are over a 726,200 loan amount, you can benefit from a jumbo loan. And a jumbo loan, for every 20 points, you receive a benefit to pricing and a better interest rate. So if you're 727,
every 20 points on your credit score.
yes. So if you're 740, 760, 780, 800 being the top tier, you're actually getting quite a benefit for having that higher tiered score. So
Yeah.
Don't count other products out to combat these changes. But again, the changes aren't bad.
All right. What do you think, Amy?
I mean, I think it all, Ashley covered a lot there. I think it really is about strategy and talking more about just the rate itself. Like, what is the long-term goal for these things so that we can strategize through things? I'm seeing where we're looking at, I have clients, because these are only impacting conventional loans that are conforming. So if, we may look at a conventional compared to an FHA, and it may make more sense that they go FHA for a short period of time, because we all know eventually the market's going to correct, and then you'll be in a place to potentially look at refinancing. So I think strategy is an important part. Also, I've had conversations with clients about the fact, don't put the full 20% down, put that lower down payment. And then a lot of conventional options have an option called a recast, where then you can later on apply that large deposit to your principal and re-amortize your loan. Just make sure that you talk to your loan officer about that to make sure that the product they're putting you in has that option. So there's definitely ways to get around it.
Yeah, I mean, it sounds like you need to partner with someone that really knows the difference on the nuances on some of these things. What do you think, Gabby? Because I know, can you speak to the fact that it doesn't really, like, if you're a first-time home buyer, what programs versus this, and like what comes into play?
Yeah, absolutely. And like Ashley said, this is not a surprise to us. We've been preparing for this for quite some time now. So a lot of our clients that are already closing in May have already gone through these adjustments if they're doing a conventional loan. But I talk all the time to first-time home buyers, and we look realistically at what is going to be their best option. Is it going to be conventional 3% down first-time home buyer program? Because there's certain products with Fannie Mae and Freddie Mac, which is Home Ready and Home Possible. They're not actually first-time home buyer products by nature. They're based on your income that you receive in your household. But if you do one of these products instead of just a standard conventional, those are actually not impacted by these adjustments as well. So outside of the clients that fit into that box, clients that are over those income limits that are doing a standard conventional product, I've been comparing with them, like Ashley and Amy were saying, a government product, looking at FHA, because really the only and the biggest difference between a conventional and an FHA product is how the mortgage insurance is structured and how those fees, the PMI is going to be on an FHA loan typically for the life of the loan, unless you refinance out of that loan, which is what we're going to be seeing a lot of our buyers doing within the next couple of years. So, maybe it's better to do the FHA loan right now, pay that PMI, get a lower interest rate, a lower payment, and then in the next, 12, 24 months, be able to refinance into a conventional loan. And at that point, your home might have appreciated enough where you could get rid of your PMI altogether, or being able to reduce it quite significantly. So just, again, being able to strategize with your loan officer. And if you are a first-time home buyer, knowing that there's more than one option out there available to you.
Yeah, I love it. Absolutely. It sounds like it's very customizable based on the person's situation, and each one's unique. So get with someone that has experience and knows the products and has availability to them, right?
Definitely.
So what other news topics are you guys kind of hearing out there? There's a little bit going on with the regional bank crisis, Wells Fargo leaving the industry. What kind of other topics do you guys, hear out there and think are important to people?
I mean, with respect to Wells, I would say, I think they left retail mortgage lending mostly because of risk and tolerance and just, the exposure that they had. They're such a large power force that they can, dip into banking and really expand on other products they have. I would say with the banking crisis, I mean, it's more so isolated to your smaller or regional banks, and it has a lot to do with treasuries that they purchased at such a low rate in the previous years, and with the Federal Reserve raising prices on the Fed funds rate at such a rapid rate over the past year and a half, it's caused kind of a bottleneck, and they're stuck holding some funds. So, I will say, I don't want to dig too deep in it. It's very, very detailed, but unfortunately, for the banking system, if you do start to hear a little bit more turmoil, I would say that's probably going to be an indication that rates will start to trickle down on a 30-year fixed or long-term financing. A big report that will be out next month, May 10th, would be the CPI report, and that measures inflation year over year. So if you are looking to see, what rates are doing, that's a good report to tap into and watch and analyze. And of course, we have access to all that data and can certainly push that out there to you at the time. That coupled with if the Federal Reserve in the week of, I think they're meeting May 3rd, if they decide to not raise, however, right now it's looking like a 69% chance as of this morning that they will raise a quarter. If they do that, I don't see us seeing rates go down too much. But say they don't raise, as well as the CPI data comes in better than expected, you could see rates trickle down, and relatively quickly, which I'm hopeful for. So
we had that happen a couple of months ago where we had a CPI inflation report came in that did have a slight trickle down in the interest rates a couple of months back, and it was such a wonderful relief. And then, they did, as they have been doing, started to trend up a little bit. So I think we're going to continue to see that trend this year, in terms of that up and down kind of motion with the interest rates. But like we've always said, and we keep saying to all of our buyers, you don't want to wait until interest rates have leveled out or decreased completely, because you'll see yourself in an even more competitive market. And in all of our markets, I know we're seeing an inventory shortage. That's something else that we're talking a lot about,
Yeah, I'm glad you mentioned that.
Buying homes.
Yeah, absolutely. What are you guys seeing in your respective areas in terms of inventory? I know that's a hot topic.
I mean, I think it depends on the area that you're looking in. Of course, every area is going to be a little bit different, but there's definitely a lot more buyers than there are actual listings on the market. And there's actually the Case-Shiller report that came out actually is showing all of these reports that come out, they're looking in the past. So you have to remember, we're comparing everything to what happened last year and to what's happening now. And oftentimes when these reports are coming out, they're from the previous month. So realistically, when you're looking at homes that are being built, we technically, per that report, have like a 7-month supply. But then when you look at the homes that are actually built and ready to move into, it's actually only like a 1-month supply. And so that is, it's standard supply and demand. And so right now we're seeing still more of that seller market, but because people have gotten a little bit more cautious in certain areas, you will see where sellers are starting to pay closing cost concessions again and things like that. So you definitely, if you're not married to your mortgage, you can refinance it, and it's better to pay a little bit less for the house now, even if you're paying a slightly higher rate, and then refinance it later on. So at the end of the day, if you're paying $10,000 to $20,000 more for the house next year and you decide to wait, that's still going to balance out and eat into some of that savings if we do see the rates go down.
Good point.
Right.
Yeah, plus you get to live there, so that's a beneficial. All right, well, that is all I have time for current events. I'd love to run into home inspiration stories, my favorite segment. All right, let's talk about home inspiration stories. Gabby, tell me what you've got that might be exciting for other listeners to hear.
I've got a good one for you guys, and I'll try to keep it brief. So last month, I was able to help my youngest borrowers to date. They were 18 years old and 19 years old.
Wow.
Right?
That's awesome.
I wish I bought a house at that age.
Right.
They were a wonderful referral for one of my top agents, and they had gone through a couple of different lenders, and I believe I was their third or fourth call, and they were getting frustrated with the process because of their age. They were getting the runaround from these other lenders, try to understand their income because they had a short employment history because of their ages. And we were able to get them pre-approved for the home price that they wanted, which was right around $280,000. And they purchased a home. We did a USDA loan for them, which is a 100% finance loan, which means there's no required down payment. And we also coupled that with a state housing grant, which assisted them with $8,000 to go towards. If they had a down payment, it would go towards that. But since they didn't, it went towards their closing costs. And it actually ended up covering all of their closing costs. They also received a seller credit of a couple $1,000s, and they were able to bring $0 to closing, which is amazing. They even got some money back at closing. Because you can do that on government loans. You can receive back to your earnest money or whatever you've put into the transaction up front. So they actually receive that back at closing.
Wow, that is incredible. Gosh, that's got to feel good.
It was amazing. I was like not even their, relative, and I was just so proud of them. And it was an honor to work with them. But it just shows that you can buy a home at any age.
Yep. I love that you were able to figure that out for them and guide them through that. Awesome. Amy, tell me a story that you have that might be a home inspiration story.
Yeah, definitely. I think who you work with is super important. And as much as technology has come into our lives and can help, sometimes a good old school phone call can really make a huge difference. So I was introduced to this awesome agent, actually rescued a deal for her, and she had another deal kind of go south, and it was on new construction, so they had to use the preferred lender. Well, the preferred lender at that point didn't really talk through their scenario, and they basically denied them a week before closing and said, we can't do your loan. Because I'd rescued another one, she called me. I was like, look, I'm not making any promises, but we'll talk. I mean, it really came down to mortgage knowledge and IQ and knowing guidelines. And the other lender basically said that they couldn't use her child support income because it wasn't court ordered. It's considered voluntary. Well, if you read the guidelines, you can use it if you can get the proper documentation together, which is a lot, but again, all it was a conversation that I was able to then get that documentation from her and give her that extra $700 a month, which kept her qualified for the house. And we closed her because we're awesome at ACM in 2.5 weeks. So yeah, it was great.
Wow. So you were able to get that extra support documentation that you needed, and that was what you needed to get her in. Wow.
Yeah.
You must have been so thankful.
A little bit of elbow grease.
Exactly. Just got to talk through it, work together.
Yeah, I love that. I love it. Ashley, tell me a story that you have that comes to mind.
Oh, wow. I mean, 21 years. I have so many stories, I will tell you. But the recent one I have actually closing this afternoon. A previous client of mine had referred me their friends, and they were out looking at property on a weekend. And they said, look, we don't think that the deal we're getting is that good of a deal from the current lender we're talking to. And I took a look at it and I said, what is your income stream? How are you paid? And both of the buyers were first-time home buyers, and both of them had decent salaries. One had additional income that was bonus and commission income. And this again boils down to where expertise and knowledge and guideline strength sets us apart from our competition, I believe, because I spoke to the borrowers, figured out that with just one of the buyers on the loan, without their commission and using the median income for the area, we were able to get them into a first-time homebuyer program that allowed them to go down to 6 1/8 on their rate for 0 points versus the other lender who was putting them at 6.99 because they were using a product that they didn't have the knowledge of, that this buyer could fit in this particular zip code in this 120% AMI average median income product that was conventional. So again, knowledge is key. Working with someone that knows, is up to date with all of the latest products is really what sets us
It
apart.
is. It's key. We're seeing it more and more with your stories about how, like, it really is crucial to get with someone that has the experience. I think first, believing that, or just checking out, like, is it possible? Can I buy a home right now? And then, in terms of like finding someone that you're comfortable with to share your information with, because I think like a lot of times, you're getting pretty personal with people, right? I mean,
Oh,
you
yeah.
have to be able to dig in there, see what income you can use. It involves like things like child support or things like certain debts that they might have. And then you're able to give them the confidence and work with the realtor to find a home. And
Mhm.
gosh, I just love those stories. It's awesome. I personally actually had a story this past month that was of a closing. It was a new construction loan that the builder's lender really couldn't get their arms around, and involved several steps. It involved the person selling their house, paying off some debts, getting their credit score up, getting their debts down, refinancing, a car, all these kind of things, like several steps. And it worked out great for the buyers, and the other lender wasn't able to get it done. And it was just, sometimes as loan offers, we don't really realize how much impact we have. But if we can dig in there and really help people solve these problems, and sometimes they're multi-level. So I just love these stories. So
I think it's important to remember that, like, I think people get nervous, like you're opening up your whole life to to somebody. And so I think because we do it every day, sometimes we take it for granted how nervous people are when they come to talk to us. But know that we're on your side. We want this for you as much as you want it for you. And so instead of just filling out that online application, have that conversation. Like, what are your goals? Is this a forever home? Is this a 5-year plan? Where do you want that payment to be? Are you comfortable, working and paying other things off, getting gift money from somebody, so planning is such a huge part of it, whether it's now that you're doing something or you're planning a year from now. Have that conversation so you know what you're planning for.
Absolutely. You need to know where you are to get to where you want to be. And I feel like we do such a good job with that. We do credit repair. I mean, we're digging deep, like Karen said, and taking into account short-term and long-term financial goals for a buyer. I mean, it's more, like you said, Karen, if someone looks into refinancing their car, that might save them more than putting 20% down versus 10% down. And this is where we shine and come in and help a buyer restructure their entire life with respect to the mortgage and financing and all of the things that come along with it. I think it just makes us happy and proud. And I always tell my buyers, no question's a dumb question. Ask away. Like, we're here to help guide you. And, we've heard it all. So whatever you have going on, if we know now, we can educate you on how to get and optimize the best loan program for you months down the road, if you're looking to buy next year.
Yeah, absolutely. It's helping them with that strategy, and working on all the details. Thank you, guys. So now we're jumping on to segment 3, where we talk about grow with me and that personal growth mindset. Hey guys, we're back with Grow With Me. Just wanted to talk to you a little bit about it. This is probably one of my favorite things to talk about, is personal growth. And I know I've talked to you guys ad nauseum about that. Amy and I have had long conversations. And then also just growing professionally, equaling growing personally, getting to know kind of your strengths and what you're good at, how you can help people and how you can leverage the talents that you have. I've been thinking about the fact that when people think of salespeople, a lot of times they're like, oh, salespeople, they're so grimy, they're so, pushy and that kind of thing. And I actually just don't think like that at all about salespeople. I think, we just were talking about how much we, could help people, and just the feedback you get when you really add value to someone's life, especially, when you're purchasing something so large and impactful to your future. And so I just think sales is such a beautiful thing, and being able to, help people at a time when they are really confused about a big purchase is just a beautiful thing. So wanted to open it up to you guys. Gabby, maybe you can start us off. Tell me, with the whole Grow With Me theme, what kind of topics come to mind for you? Like, what's going on with you personally?
Right now, I would say the stage that I am in my life is I'm a new mom, and keeping some of these healthier habits that I've had, throughout my career is more challenging right now. So I do things that, incorporate, different portions of my life. So I love to go on walks in the afternoon with my son. It's a great way for us to get out of the house. And also I'm able to still keep, texting, emailing, getting on phone calls, but it's a great way to balance, continuing to work and also keeping a healthy habit of getting out there, getting some fresh air, and just getting a good breath of the outside world.
Yeah.
And in addition to that, I do mortgage coaching. Karen is a big proponent of coaching as well. And I feel like that's a big mental, growth mindset that I have. And I love coaching. I think it's a great way to speak to other like-minded individuals that can help, reframe your mindset on how we do our job, how we treat our clients, how we treat our own mental health. And it's something that I look forward to every week. And it's helped my career tremendously. And also that, that crazy work-life balance that we talk so much about, with trying to level those scales as much as possible. So, and I love to listen to audiobooks. My husband jokes with me that if I'm ever still for more than 2 minutes, I fall asleep, and he's absolutely correct. Because I'm go all the time. So I can't actually read a book because I will fall asleep. So I love audiobooks. If I'm in the car, I'll put one on, and it, an array of topics of, things that let me kind of mentally relax, and then other things that are more like, business driven. The one that I just was listening to recently is called Burn the Boats. And it's all about going all in with your plan A. So I really enjoyed that one. So those are some of my habits.
Those are great tips, Gabby. And I know I knew you before you had your baby Judah. But I knew that was potentially a concern. Like, how am I going to get all the things done plus be a mom? And you have just been rocking and rolling with it. And it's so cool to see. And I'm glad that you're always willing to grow and shift, right? Like, you're changing the things you do, and you're tinkering constantly to make sure you're getting that mental health, the health, and your business is thriving. And, I think you had like one of the best months in the company, the month that you had your baby. So like your why of doing things has even grown greater, right?
Sure, absolutely.
Yeah. Ashley, tell us what's on your mind in the personal growth area.
Well, for years, I want to say probably close to a decade, I've been in a networking group. I know Gabby is in one as well, where we meet every week, and it's local professionals who really dial in on how they can refer one another. And it's also helped me with public speaking skills tremendously. I love A, networking, and B, teaching.
Yes,
so I work with a lot of local real estate companies and actually am offered to teach them in various facets of mortgage lending. And I just really get so much out of that. I'm kind of this person that doesn't say no. So if anybody asks me to teach something, I'm like, yeah, I'll figure it out. But I love also, being around. I have 2 daughters, and I try to participate in stuff with them at school. And I have a lot of friends that are teachers. So I go out of my way to make sure that they feel amazing at my local schools, and just try to give back. I know all of us on this call, we all donate to Children's Miracle Network for every loan that we do. Right. So that gives me some great satisfaction. So every mortgage that I originate and closes in the borrower's name, a donation is made to Children's Miracle Network. So that is huge to me as well. And another thing, everyone knows that if you know me, that I love Peloton. I named my puppy after Cody Rigsby, so his name is Rigsby. So I changed my name to my dog Rigsby, I think. So if you see me on there, come ride with me.
I love it. Amy, what's on your mind, honey?
So I recently opened up the Millioc, North Carolina office. So, being consistent and actually going to the office every day has been a huge shift for us since opening up the beginning of March. So my assistant and I both, we got standing desks and we have treadmills under our desks now.
I love
So
it.
hey, let's keep active during the day. We're going at a snail's pace. I think it's like 0.6 or 0.7 miles per hour. But when you do it all day, that mile and a half, 2 miles makes a difference. So, that end of it. And then just making sure that we're adding value to people's lives. Like Ashley said, we are all in networking groups to do that. So if you're focusing on how you can help other people grow and improve themselves, I feel like it's like that karma. It just comes back to you. So, you're focusing on what's best for those people. I know a big one, I've actually partnered with the financial planner in my networking group and the estate attorney, and we're working on planning a workshop for all of our past clients for estate planning and things like that. That's not something you necessarily want to think about, but you have to in order to be able to set your family up for success and things like that. And, so giving people the vessel to be able to designate that time to actually get those things done, to add that value and teach and educate. I like to think we're educators more than salespeople, because really that's what we're doing. We're helping educate you on how different things impact your life so you can structure things in the best way for you and your family.
Yeah, that's awesome. I love it. I love all of you guys and the way that you show up, as creators to, you see a problem, you jump right in, and you are incredible leaders in your community. So,
And I think that we're trusted advisors in our communities. So I oftentimes have a myriad amount of people that come to me and say, who do you recommend for painting? Who do you recommend for this? We are literally so plugged in and well connected, just because of all the people that we interface with doing what we do. And we are a grand resource for home buyers as a whole and our real estate referral partners.
Yep, absolutely. Awesome. Well, that brings me, guys, to segment 4, which is hot tips.
All right.
All right, welcome back. Hot tips. Who's ready to share their hot tips of the day? Ashley?
I would start with try to set your up. I've actually said this already today, but try to set yourself up for success. Don't, decide on a weekend to go look at open houses and then want to write a contract that night. If you have, an inkling of your willingness to move in the next 6 to 9 months, a year, even 3 months down the road, if you're in a rental and you're in an apartment and your lease is up in 2, 3, 4 months, please contact us. Work with your real estate professional to get you some information on that side. But more so than anything, if we pull your credit, analyze what products, programs you're eligible for, and if you're not, what you could be eligible for if you did what we set you up to do in the next 30, 60 days, you could actually optimize your interest rate and in some cases save a quarter, 3/8 in rate just by doing a few tweaks. We have a very sophisticated credit analyzer, so we can actually plug in exactly where you are. Say, be it you're at a 739 and the next tier is 740. I can tell you, pay this card down by X amount of dollars, send me proof that you've done so. We can send it to our credit reporting service and have the report updated, and thereby saving you quite a bit of interest over the life of your loan. So preparing yourself. We at Atlantic Coast do what we call Approval Plus. So we will actually fully underwrite your loan prior to you going out with the masses and competing on a property. So if you want to be fully approved and have the ability to potentially scratch contingencies, we can put you in that position. So again, we're a great resource, and I think those are a couple tidbits that I would certainly do.
Absolutely. I mean, you don't want to go out in this market naked. You got to have the right, armor on to fight. So I agree, Ashley. And I was thinking even myself as a tip, I had a buyer call, and he was found a house that he wanted to buy. And of course there were many, many offers, and he needed the money from the sale of his house, which we have products for. And it turned out that house didn't work out, but I'm like, hey, let's start at the beginning. You don't want to be in a rush, talking about your finances and also trying to find this house. Let's carve out what it would look like and take the right steps in the right order so that you feel more comfortable. Maybe get a home equity line now while this is your current primary residence, something like that. So that's a great idea. Amy, what's your hot tip of the day?
So I mean, kind of like what Ashley said, one of the great things about doing that pre-approval plus is that any of my clients that have gone through that, when they are making an offer, as soon as that offer is submitted, I have their agent let me know, and I actually pick up the phone and call the listing agent instead of waiting for that listing agent to call me like, hey, this isn't just a qualification, this is like a full approval, we've done their verifications, we've done everything. Sometimes it can help you close quicker, and if you can close faster than somebody else and they're going to get their money sooner, that can potentially be more beneficial depending on the seller's situation. I've also had several appraisals come in over the last couple of months where the appraisal was higher than what the purchase price, which,
Great.
That's amazing. That means they have some instant equity, but in some people's situations, it made more sense for them to do an addendum to increase the sales price and get that extra money as closing cost assistance, which then lowered their out-of-pocket costs. So it saved them money where it maybe cost them 10 extra bucks a month to do that, but they were able to save that $8,000-9,000 in what they would have brought to closing. So again, working together to kind of strategize everything out.
Yeah, I love it. Working with all the parties to make it happen. Gabby, what's your hot tip of the day?
My hot tip is the 2/1 buy down, 2/1 buy down. And it's a concept that started to come back late last year. And what it does, it helps the client be able to save 2% of their interest rate the first year of the mortgage. And in the second year of the mortgage, they're able to save 1% of the original interest rate, the note rate. And then in the third year through the 30th year, it would go back to that original note rate and stay there. Now, what this does is obviously saves clients hundreds of dollars per month in interest that they would have paid, and gives them a way more palatable mortgage payment, one that they can swallow and be okay with, while interest rates are higher than what we're used to. Now, the great part of this is that there's no cost to the buyer. The cost actually comes from the seller. So it's a seller credit that is negotiated up front. And using a local lender, we work with our agents one-on-one to help strategize how we want to present that offer to the seller so that it's a win-win for both parties. And that really dynamically is helping people have a much lower monthly payment, and you can refinance after that seventh payment that you make. So if when the buyer makes that seventh mortgage payment, if rates are permanently lower at that point and they want to refinance out of that mortgage, they can do so. And they can really refinance at any point, within that third year, before it goes up to that higher interest rate in the third year. So it's a win-win for the buyer as well, because there's really no risk or liability to them. They don't have to stay in that loan for all 3 years. Whenever it makes sense for them to do that refinance, they can do so. We've had a lot of success with that here in the Charleston market. I'd say every 5 contracts, at least 3 of them are doing that. I'm even doing it myself right now. I'm buying in a property and helping my mom buy a property, and we're doing that product for her. So, I'm walking the walk that I'm talking.
I love it.
It's a great product.
Yeah, absolutely. So if the rate's 6% now, the first year you'd get 4%, then the second year you'd get 5%, then years 3 through 30 you'd get 6%, right?
Exactly. Yep. And it's such a dynamic savings with the interest, and we can run a calculation up front to tell you what the credit would need to be from the seller. So again, we can help that agent negotiate it up front. And also we can let the client know. I was actually just helping a VA buyer before I got on the call with y'all, and it was going to save him $600 a month by doing this program. And he was buying about a $400,000 home, which is pretty average, purchase price around here. So that is dynamic. I mean, $600 a month. I mean, I could do a lot with $600 savings a month.
Oh, absolutely. And I think you're right. You touched on the fact that you can refinance, and whatever portion hasn't been used up already goes towards your principal. So you're not actually losing out on the money if rates change quickly, right?
Yes, ma'am. You are correct.
All right. Awesome. Well, that concludes hot tips. You heard them here. Next, we're going to go through probably the most fun segment, hopefully, is home trivia. Please know that we are going to go through 4 different homes in the areas where we're all at. And what we're going to do is, if you're online, you can make a comment in the comments. We're going to go through each home, and what we want you to do is tell us what you think the home value is of each home that you see online. All right, this is Arlington, Virginia.
100,000.
No way.
I feel like Arlington's a lot more expensive than that. I'm gonna say like 350.
I'm gonna say 599.
Oh yeah. Well, I feel like I need to increase. Ashley knows that area.
Yeah. Okay. So, Crystal, 150,000. Yeah, girl, me too. I
That's
think 200.
all right. Let's see what we got. Crystal says 150.
Oh,
She's
no.
not been to Arlington lately. I don't think you can get a sandwich for that. All right. Should I go ahead and reveal? All right.
Yeah.
Let's say 685,000.
Yeah, I even wanted to go in the sixes.
Yeah.
You go, Ashley. Get a girl.
Good Lord.
All right. Now we got Mount Pleasant, South Carolina, Gabby's hometown.
So pretty.
Ooh.
That's at least 1.4.
I was just gonna say, like, you're probably over $1 million, like
A 1.59.
1.
Oh, look at that pool.
Look at the pool.
Maybe
1.375.
1.5.
5 bedroom.
Depends on what part of Mount Pleasant too, because there's South and North Mount Pleasant. So,
all right. What's your final answer, ladies?
What did I say? 1.59?
1.6.
1.3 final.
All right. You guys, welcome to 2023. 1.8.
Oh, well, you didn't show us the boat dock that's in the back, I'm sure.
Right?
It's on the water. Come on.
All right. All right. Next up, we got Amy's hometown.
That is a vibe.
That's pretty. I like the sitting area.
That is a vibe. They must be. They must
Get
be
that pillow up.
Carolina fans.
I'm gonna say 265.
2 bedroom.
289.
350.
Amy, what did you say?
265.
All right. Well, time's up. So, Amy, is that your house that you're selling?
No.
You
Is it 265 for real?
Yes. She knows Moyak.
I know Moyak, y'all. If you're buying in Currituck, I'm your girl.
So she was the closest, Tom.
Yes.
You should have. I have my Myrtle Beach house on the market. You should have put it in here so I could have got some advertising.
Oh, there we go. Let's drum it up. What's that for sale for?
Oh, 589, single family in Market Common District.
All right. We'll follow up with Ashley.
All right. Yeah.
All right. Last one. Virginia Beach condo, 2 bedrooms, 2 baths, 1,400 square feet.
Oh yeah, that's like 1.3.
What?
Really?
Yeah, and the condo fees are probably like $700 or $800 a month.
I'm
That's Sandbridge.
That's 1.3. That?
No.
It might be right at $1 million, but I think it's going to be higher than that.
saying 700.
890.
This is like Price is Right. You guys all went overbid. So none of you. I'm just kidding. 349.
Amy,
You should buy it, Amy.
Amy, you messed us up. I was
did.
No way.
Okay, 1.3 with no condo fee. Once you factor in that high condo fee.
I love it. All right. So
obviously, I haven't been to Sandbridge in a while.
we'll follow up with the winners after. And that leaves us to our last segment, which is Investment Fastlane. All right, you guys, we're going to talk about our favorite investments. My favorite investment, like for a rental, I'm going to say I prefer a good townhouse to a condo. Just personally, we've invested in real estate over the years. And with the condo fees, if you turn that into a rental, a lot of times the condo fees will go up over time and it eats into your profit. So that's my investment fast lane tip. What you got, Gabby?
My favorite investment is buying a primary and then turning it into a long-term rental and then buying yourself the next primary. I think that's a great way to get into a home for little down payment out of pocket.
Yeah,
getting a
so
lower
so
interest
walk us
rate.
through that. Like, what would be the down payment initially, potentially, and then this after the second home? What would be the
If you are a
lowest?
first-time home buyer, you can buy a home for as low as 3% down payment on a conventional loan, or if you're doing a government loan like FHA, it'd be 3.5%.
Okay.
And you buy a home, you get into it, you live in it for a year to 2 years, you move out, buy your next home, which would be a 5% minimum down payment on conventional financing, which is still really low. And then you can turn your home that you've lived in for the last couple of years into a long-term investment. And because your interest rate will be lower, you'll get some great cash flow out of that property, and it can help fund, the next mortgage payment on your next home, because it'll obviously be higher because normally you'll upgrade from that home. So it can help you, handle that
Offset.
new and bigger mortgage payment.
Yeah, absolutely. I love that.
I
Amy,
forgot there
what's
was a timer, so I started talking really fast, like halfway through.
It made you nervous when you see the time. You're like, oh my gosh.
Yeah, I forgot about it. I was like, ah!
time's up.
So I feel
Your
like mine's
turn.
kind of similar to what Gabby's saying, except for I've been talking to college kids, because I wish I had done this when I was in school, of using an FHA loan and buying either a duplex or up to a quadruplex, living in one of the units and renting out the others, and then doing just like Gabby just said, and buying something else later. So I mean, if we're talking about housing investments, I would gear everybody, when you're in your early 20s, man, buy that multi-unit, and that's a great way to start an investment portfolio. Another thing that I've recently done over the last several years with my financial planner, my daughter, I was looking at all those college savings things. And she's like, well, what if you get scholarships, things like that, you may not be able to use that money for other stuff. So she had me do a whole life insurance policy instead. So I actually did it on my daughter. So I'm putting the same amount of money I would have put in that college fund. It's creating an asset that's gaining income that then one day she'll be able to use to pay 4 years of her school. If she doesn't need it for that, she can then use that for other things. So just getting creative in your investments and things that you're looking at.
Yeah, absolutely. Great advice. Cool. Thanks for sharing. Ashley.
Well, I think the biggest thing is to diversify. And shout out to my financial advisor, Nate George, Edward Jones, Ashburn, Virginia. He's phenomenal. But I will tell you, I own 4 properties, have stocks, CDs, checking savings, 401k. Maximize your 401k every year, especially if you have a match from your employer. Do everything you can. I mean, I'm talking at a level that's a little bit like not your first time home buyer. You can eventually get there through these strategies that the ladies have discussed. But definitely diversify. Don't put all of your eggs in one basket when it comes to investing, and just seek sound advice. That's all I can tell you.
Nice. Ashley, can I borrow some money?
And one thing that I want to add, if you are a realtor or a loan officer in Northern Virginia, DC metro area right now, we need a hug. Okay?
Yeah.
Because every weekend we're spinning our wheels with multiple offer situations. I probably had a half a dozen or more people write contracts, and they were up against 10, 12, 14 offers, and none of them got through, but it was a weekend of working hard. So we're all come Monday like head between our legs. So eventually these buyers get through. We persevere over time with a lot of our strategies, but it's a difficult time for us. So give us a hug.
We're going to will it into existence that every offer is getting accepted this weekend.
Yeah.
There you go.
There you
Yes,
go.
let's manifest it, please.
Let's manifest that.
I should have add to that one segment, as I need to be manifesting.
Investing, manifesting. Well, thank you guys for being on the show and sharing your insights. It was a great show. I loved all the different segments this time. Thank you guys for joining us on the ACM Mortgage View. Till next time.
Thanks, Karen, and happy birthday to you.
Happy birthday!